Hi, folks. My name is Mike Zlotnik, and today we're going to chat a little bit about Tempo Opportunity Fund. Thank you in advance for all your time. Just a disclaimer, this presentation is for educational purposes only. We're not offering you to sell securities or anything at all, nor are we giving any kind of advice. Please consult with your attorney or CPA professional before making any investment decisions. And if you're interested in Tempo Opportunity Fund or Tempo Growth Fund, please request a PPM, Private Placement Memorandum. That is the only formal offering document, and it's available to accredited investors only. Past results don't guarantee future performance. Please read the disclaimer. Thank you kindly. Just a couple of words about me. I'm known as the Big Mike. Kind of the name stuck. I'm I'm 6'4", a little bit on the heavy side, and people have been calling me Big Mike for many years, and so comes the Big Mike. I live in Brooklyn, New York, with my lovely wife, 4 kids, and a cat. And I'm CEO of TOF Management Group. We are a fund management company. We have a family of funds, TF Investment Fund 2, our income fund, Tempo Opportunity Fund, our income and growth fund, and Tempo Growth Fund is our growth fund. Been a full-time fund manager and a full-time real estate investor since 2009 and part-time real estate investor since 2000. Previously, I had a career software executive from 95 till 2009, at which point I went real estate full-time. It's been my passion and something I'm good at, something that I love to do. And that's why real estate. Um, I have a book called How to Choose a Smart Real Estate Investment Fund available on Amazon. Also, um, if you're bored and you got nothing else to listen to, I encourage you to listen to Big Mike Fund podcast. It's a real estate podcast focused on real estate investors, movers and shakers, kind of big name and some financial experts, pretty much all around, revolving around the world of real estate. We invest in a broad range of real estate projects, some debt investments and some equity investments with predictable cash flow and value-add driven appreciation, broad range of sectors, self-storage, multifamily, conversion of hotels to housing, and so on and so forth. Why people invest with us? Experience, again, been fund manager since 2009. We've got a great family of funds, strong performance. Diversification, we spread the risk among many assets. So your single investment participates in a lot of upside of these investments and has strong downside protection through the virtue of well-diversified portfolio. Best access points, most of our deals are not available to public at all. We negotiate the best deals with sponsors and some other deals that are available to public because we write bigger checks and we have long-standing relationship. We get better terms than if you went into those deals directly. So we present the best access point. Business philosophy, our investors come first. It's our most important asset and our most important relationship. We pride ourselves on white glove service. Transparency, we use reputable SEC counsel as well as Verivest as our fund administration and onboarding platform, third-party administrator. Communication, we communicate often through emails, online portal, postings, quarterly statements, Zoom calls, annual meetings, and annual virtual calls in today's world. Business philosophy, we like to think the way Warren Buffett approaches investing, sort of really be very, very selective at the people we work with, the people who borrow money from us, or people who we invest with, called sponsors or operators. The project selection is critically important. It has to match our diversification strategy and our overall objectives. And also, we need to maintain uh, proper diversification through many dimensions of diversification, equity, debt, location, deal type, and operator. And then we also decide how much capital to invest, and we negotiate terms based on that. All our deal flow is relational. We don't take any cold business from the street. It's our network. It's the most valuable. It's the next most valuable thing that we have. And then Our waterfalls are very professional. We have institutional level funds with strong pref and 80-20 splits, 80 to investors, 20 to us as a performance fee for Class A units in our funds. Fund manager's job number one is diversification. That's what I think about day in and day out. All our investments have that in mind. We try to manage risk well to avoid the roller coaster ride, like the oldest wooden roller coaster in the country here, Brooklyn Cyclone. And instead, we prefer to make sure it's smooth sailing for our investors. Tempo Opportunity Fund, that's the fund we're going to talk about today. If you're interested in other funds, please reach out. But this is this presentation is specifically focused on Tempo Opportunity Fund. It's an evergreen fund. It's open-ended, raises capital on quarterly basis. It redeems investors on quarterly basis, and it distributes realized income on quarterly basis. The fund is broadly diversified. Target return is 10 to 13% annually net of all fees, with approximately 2/3 of the income coming as distributable income and 1/3 coming in the form of appreciation or growth. Again, it's tax efficient. It passes through depreciation, and it is also IRA friendly. We don't use leverage on a fund level, and thereby removing the risk of UBIT related to leverage on the fund level. And the fund has 7% cumulative preferred return, and then 80-20 split for Class A units, 70-30 for Class B, and 60-40 for Class C above 7% pref. To learn more, you can visit tempofunding.com/income. Our portfolio is broadly diversified. We have a number of hard money loans on fix and flip projects, a number of commercial performing debt investments, distressed commercial debt, and broad range of equity investments in multifamily, self-storage, residential portfolios, shopping plazas, office, mixed use, conversions of hotels to housing, and so on and so forth. Tempo Opportunity Fund is audited on annual basis. Armanino LLP is our auditor, and it's a large CPA firm, and we received the unqualified opinion every year since inception. Essentially, the books are good and clean. It's the best opinion one can receive. How does the fund derive income and growth? So the fund is focused on both strategies, income strategy and a growth strategy. So income to the fund comes in the form of realized gains. It's the points, the interest and fees we collect on hard money loans, and then net operating income and distributions from the equity projects. And we distribute realized income or realized gains on quarterly basis to our investors. Investors may reinvest distributions if they like, or they can take them in cash. The growth part of the fund, what is also known as unrealized gains or appreciation, comes from forced appreciations on value-add projects such as multifamily renovations or self-storage development or redevelopment or conversions of hotel to housing and so on. We don't plan for natural appreciation, but if it happens, great. The forced appreciation is what drives most of our strategies. So total return equals to the income or distributions realized income plus the growth or appreciation of units. You actually see that in the form of appreciation of the price per unit on quarterly basis. Obviously, there are no guarantees. In challenging markets during pandemic, things are very dynamic. But in general, value-add projects create value, and so the investment portfolio appreciates regardless of what happens in the market. Again, structure of the fund, it's a growth and income fund, dual strategy. Target return to investors 10 to 13% net of all fees to investors on average on annual basis. Preferred return 7%. We get paid 2% management fee to keep the lights on. And then the performance split, 80-20, as I mentioned, for Class A, 70-30 for Class B, 60-40 for Class C. Distributions quarterly. Fund has some unique benefits. All the points and fees collected on hard money loans go to the fund, not the manager, and they're all subject to the waterfall. And manager doesn't charge asset origination fees in this fund. Accountability and transparency. Stoll Reeves is our SEC counsel, and then we use VeryVest as our fund administrator. And we use them as the onboarding platform for subscription. It's a great fund administrator. And also, we are one of the few VeryVest verified fund management companies. Thank you for your time and consideration. If you're interested to learn more, you could schedule a call, the Zoom call with me via bigmicecall.com. And you can visit our sites for more information. You can also request private placement memorandum and a term sheet by emailing me, mike@tampafunding.com. And if you're ready to make the investment, I'll introduce you to VeryVest and the onboarding platform. Appreciate your time and consideration. Have a great day. Thank you kindly.